Credit Score 101 is the topic for episode 101 of the Martini Mortgage Podcast. Who knew that 3-digit score would predict your likelihood to repay a loan? Spoiler alert, the higher the credit score, the better. However, a higher credit score is not a prerequisite to get a home loan. What affects your credit score and what can you do to impact your credit score is what this episode of the Martini Mortgage Podcast is all about.
This is the Martini Mortgage Podcast with Kevin Martini.
Thank you for investing your time to tune into the Martini Mortgage Podcast. I want you to know that I say we because behind the scenes, my business partner and fellow mortgage strategist, Logan Martini, spend a very good portion of time to curate these episodes to simply explain things that someone who is thinking of buying a home and getting a mortgage needs to know. So let me start by sharing a fact. To get a home loan, you need to have credit. However, I have found that many people overestimate not just the credit score needed to secure a home loan, but many people overestimate the amount of money that is needed for down payment to buy a home too. Let me be 100% transparent. I believe in home ownership, and I truly believe that for a family to create generational wealth, they have to own real estate. Now, one can pay cash for that real estate, but for the families I serve, I help them get a mortgage. To get a mortgage, you need to have credit. Yes, credit is not the only determining factor to get a mortgage, and credit is not the only factor that determines what your home loan rate is going to be, but it is a very big part. Let us start with some facts that many people just do not know. Your credit score is not the same across every industry. Now, what do I mean? A car dealership is going to have a different credit score than a credit card company. A mortgage company is going to have a different credit score than one of those free consumer sites. Why is this? As a primer, there are 3 major credit repositories or credit agency if you prefer. Each credit agency has a proprietary model based on the types of credit you are seeking. If you think about it for a moment, it kind of makes sense. A credit card company looks at how you're handling revolving debt, where a car dealership will look at how you handle installment debt. A mortgage company looks at it all. And those free consumer sites provide a 30,000 feet snapshot. Let me talk about those free consumer sites for a minute. It is my opinion the generic score they share is helpful to give you a feeling where your credit score is on the aggregate. Let me use the weather as an analogy. The free consumer sites are going to tell you if it is hot outside or if it's cold outside. They might even tell you if it's chilly or warm, but they are not going to tell you the exact temperature, nor will they be able to tell you if it's going to rain. The only score that matters when getting a mortgage is the score secured by the mortgage company. Sadly, all mortgage companies use a vintage scoring model, but since it has historically been effective, it is the industry standard. Yes, every mortgage company uses the exact same credit score modeling. Since this is a mortgage podcast, and since I'm a professional in the mortgage arena, let's talk about the credit model for credit scores in the mortgage world. This credit score ranges for home loans start at 300 and goes to 850. Simply put, the higher the credit score, the better the mortgage rate you can secure for your home loan. And this is because it is perceived that the higher the score, the less risk to a lender. What is considered exceptional and what is considered poor? If your score is 579 or below, it is considered poor. If your score is between 580 to 669, it's considered fair. If your score is between 670 and 739, it's considered good. If your score is between 740 and 799, it's considered very good. And north of 800 is considered exceptional. Right now, the average credit score in the U.S. is 695. Now, you may be higher than the average, or you may be lower than the average. It is important to me that I highlight to you that your credit score does not define you. Sometimes bad things happen to very good people. I see it every day. With that said, I've had the privilege to help families that have exceptional credit scores all the way to families that have poor credit scores. Getting a mortgage, regardless of where your credit score, is a process, not an event. Sometimes that process can be swift, and sometimes it takes time. And that is why, regardless of where your credit score is, you should always seek out a trusted and local mortgage strategist to help you secure the lowest cost of borrowing. I have never said no to a family, but I have said not now. And we rolled up our sleeves to make that not now to a yes sooner than later. The mortgage credit score model looks at 5 components to develop your 3-digit score. Some of the 5 factors carry a heavier weight than others. Let me start with payment history, the major factor in calculating your credit score, and 35% of your credit score is based on payment history. Simply put, payment history highlights how you have paid your accounts over the length of your credit. All of your payments are considered, not just how you pay your mortgage, but how you paid your credit cards and installment loans, and really anything that's on your credit report. To get granular, there are several components that develop your payment history. Now, they're not in any order of importance, but number 1 is your payment information on credit cards like Visa, MasterCard, American Express, or Discover. It also looks at retail accounts. An example of a retail account might be a department store card. It looks at finance companies, installment loans like car loans, and mortgages too. If your payments are, number 2 is if your payments are overdue today or if they will become overdue in the future. Number 3, the amount of money still owed on delinquent accounts or collection items that are on your credit report. Number 4 are public records such as bankruptcies and tax liens, plus public liens. The number of past due items on your credit report. Number 5 is the time between delinquencies and or other negative items on your credit report. And number 6, the number of accounts that are being paid as agreed. Yes, you can enhance your payment history by simply paying your bills on time. Pretty simple. If a hiccup happens, and it happens, you miss the payment, it is what it is. Get back on track ASAP and know the older the credit blemish, the less impact it will have. Now let me shift to the amount owed. 30% of your credit score is based on the amount of money you owe. Owning a fortune does not necessarily mean you should have a low credit score. However, owning a lot over a ton of creditors may be an indicator that you are overextended. And when one is overextended, there is a potential that one may default. 15% of your credit score is based on credit history. Simply put, is going to be the longer you have credit, the better it is. Let me highlight some data from Experian. Experian is one of the 3 major credit agencies. The other 2 are Equifax and TransUnion. Experian has shared that a person that is between the ages of 20 and 29 has a FICO score of 662, where a person that is in their 50s has a score of 706. And one that's in the 60s and older has the highest score with an average of 749. It is my opinion, the older you are, the more credit history you have, and this 15% really adds up. 10% of your credit score is based on your credit mix. In other words, do you have credit cards? Do you have installment loans? Do you also have a mortgage? Now listen, do not fret if you don't have all these types because it's not required. It's just nice. 10% of your credit score is based on new credit. It is believed when one opens several new accounts in a very brief period of time, it represents a greater risk of default. So, if you are new to credit, do not push out to go ahead and get several accounts all at once. Take your time. The new credit puts more pressure on your score. Remember, every industry uses their own model and credit score breakdown, and I have to share this episode is for the purpose of mortgage-only credit. Remember, those free credit services only provide an aerial view and give you just a flavor of where you are. The only way you know what your credit score is if you want to buy a home is to connect with a local and trusted mortgage strategist. In closing, you need credit to secure a home loan. Do not fret if your credit is lower than you thought. It is what it is. Myself and my fellow mortgage strategist, Logan Martini, will guide you. If we have the honor to help you and your family, I need you to know we cannot guarantee you a yes. But if we do not, we will make sure you have a path to get into a home. Again, we never say no, we say not now. And when we say yes, we will give you price and cost clarity and the lowest cost of borrowing with a world-class experience. I believe what I said earlier. To create wealth, to create generational wealth, you need to own real estate. My name is Kevin Martini, and I'm not just the host of the Martini Mortgage Podcast. I'm also the senior mortgage strategist and branch manager of the Martini Mortgage Group at Benchmark Mortgage. If you want or need help, I am here. Just give me a jingle at 919-238-4934. Thank you for listening, and please share this episode with someone you care about that need more clarity about credit scores. Stay safe. Peace and blessing. Cheers.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.